And let me quickly now go across to Peter Cardillo, Chief Market Economist at Spartan Capital Securities, joining us. Welcome back to NDTV Profit and good evening. I'm going to cut right to the chase. A lot that's happened in the United States in the last few hours. How are you assessing the likely market and currency implications of Commerce Secretary Lutnick's demand that India support the US dollar or face the possible tariff of up to 50%, especially if India continues diversifying away from dollar-based settlements through bulk purchases of Russian oil?
Well, I think, the fact that we saw strong unity at the SOC meeting in Shanghai, obviously that sent a message to the White House. And I think the White House now is beginning to perhaps reconsider that more dialogue is necessary and that they're going to have to try to win over India again. I mean, President Trump did make some statements saying, that India and China were lost, and he was basically alluding to the Russian trio partnership that we saw emerge at the SOC meeting. And so I think that what we saw at the SOC and some of the comments coming out of the White House suggest that sooner or later there will probably be a reversal in this so-called chill trend, and that should get India back on track and perhaps make a deal with the United States.
All right. Given the escalation in US-India trade frictions amid tariffs from India's ongoing Russian oil imports, what disruptions do you foresee for global oil prices, cross-border capital flows, and international investor sentiment towards Indian assets? And which indicators would you monitor most closely to gauge the real-time impact?
Well, obviously, you always have to gauge two important macro indicators, and that is consumers' confidence within a nation, and of course, consumer spending. So let's talk about consumer spending. If India continues to buy cheaper oil from Russia, obviously that boosts consumers' sentiment, and that means that the consumer is likely to spend more on energy products and vice versa. So I think a happy medium would need to be reached. And I think that, as I said before, the events of the SOC, the hard line taken by India and the White House will eventually lead to a softening of an agreement that will be beneficial to the Indian nation and to the United States. Remember that, yes, India can make trade deals with other countries, but India needs certain American products, certain American technology, and that would apply to the United States as well. So again, I remain hopeful that somewhere down the line, things will reverse.
So, and I think that that's the hope that even the United States has at this moment, because let's remember, Peter, as trade negotiations loom in the next month or two, let's look at once again what major concessions or trade-offs might emerge between Washington and New Delhi, and what practical strategies should the investors adopt to navigate expected volatility, last-minute headline risks in equity, currency, commodity markets?
Yeah, I think, the biggest point is oil. And of course, that's what actually aggravated the White House. So I think, there'd have to be some sort of a mutual agreement. That's not to say that India can't buy Russian oil, but at a reduced rate. And that means that they would have to buy some more expensive oil from the United States. But I think that's the key factor here.
All right, Peter Cardillo, Spartan Commodities, thank you so much for joining us this evening. We'll continue tracking what's happening in the United States and continue to track all of these key developments.